And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets, and certainly a very, very interesting week. I'm super excited to get into everything. First up, we are going to take a look at the broader markets, see where did we close the week on this, I can only call it a somewhat unusual period. And then from there, we'll take a look at the underlying sectors and sub-industry groups and really see what's shaping up here in the markets. But first up, I'm going to share with you some of the more impactful news that drove price action last week. And first up, in the beginning of the week, we did get a S&P called Flash survey of businesses, and it did show that the economy picked up in May. From there, we did get GDP data that was revised upward. And then also relative to the economy, we did see PCE. That's that personal consumption expenditure number, and very, very closely watched by the Federal Reserve to gauge inflation. And unfortunately, that does remain elevated. PCE data is still at that 5% level, high inflation, sticky. So really, we are seeing an economy that is continuing to move forward as it relates to exhibiting signs of strength, but we also have that high inflation. Key data as well. On Wednesday, we did get Federal Reserve meeting notes. Fed Chair Powell, a couple of very insightful comments there. He did state that they are on the lookout for a recession later this year, but they do view it as being a light recession. So we'll be keeping an eye on that. And then as it relates to their interest rate policy, it was very mixed. Powell did cite that they are keeping the door open to the possibility of having another rate hike, but at this time, the banking crisis is still too new, and they are not on track to do so at this point. At the end of the day, what we are seeing is an economy that is remaining elevated. Investors seem to like that relative to growth prospects. However, inflation remains heightened. The numbers that came out today on a normal market environment would not be positively rewarded as the market was up today. But of course, this week's move was all about Nvidia's super strong earnings report. Not only did they come in with strong numbers, they also guided their revenue estimates for next quarter 62% above estimates, jaw-dropping to say the least. From there, we did see a very vibrant add-on rally, rather focused, but it was on AI related, artificial intelligence related, and we'll get into all of that and much more. Let's take a look at where the markets closed for the week. And here we are, a daily price chart of the S&P 500. A couple of metrics you'll want to be aware of, and that is that the RSI did dip into negative territory prior to that Nvidia earnings report. However, we did end the week in positive territory. The other highly relevant momentum metric that I pay close attention to is the stochastics. And actually, they were negative earlier today. They did manage to close the week in positive territory. So net, we do have positive momentum. The markets did close just at this very key area of upside resistance. That's 4,200. We closed at 4,205. Ideally, if we can get above this resistance area, I will want to see at least several days to a week or more to convince me that we are actually above resistance, and that in turn would provide near-term positive guidance as it relates to a continuation rally. Also need to know where key support is. We did pull back very close to that earlier in the week. The debt ceiling uncertainty still hanging over the markets. This is that key 50-day simple moving average. The good news is this moving average is in a nice uptrend. The reason for the goodness there is because when it is in an uptrending period, oftentimes it will act as support at higher levels, provided, of course, that we see a nice continuation rally. From here, let's take a look at the Nasdaq, a super outperformer. It has outperformed here at least 2 weeks in a row. Last week, the Nasdaq was up 4.1%. But let's take a look at this week's rally. Nice move here. I'll pull up a weekly chart very quickly, and you'll see that the index was up 2.5%. So it did outperform the S&P, which was up nominally, certainly compared to the Nasdaq. So here we are with another area of resistance that you will want to be aware of. And I should have kept that weekly on, but it will take us, actually it is cited here, to that August 2022 high at about 13,200. That is your next area of possible upside resistance for the Nasdaq. Taking a look at the momentum here, RSI and stochastics very firmly trending upward. Now, from here, and I will cite this in my Monday MEM Edge report, you do want to be aware of the position, and this is going to be given for certainly any broader market index as well as stock. Be aware of the closing price relative to their key moving averages. Is it stretched? I did cite in last week's report what happens in these indexes if they do in fact get into overbought territory. The RSI on the Nasdaq closed at 70.1. I would qualify that as dipping into overbought territory. So you will want to be aware of what takes place. Well, I can point it out very quickly here, what can take place. Now, from here, let's go ahead and take a look beyond the markets. You want to be aware of sector weakness or strength. And we are seeing themes continue to develop here. Of course, front and center, technology up almost 4.5%. We can see this gap up on Thursday into Friday. This is following Nvidia's strong earnings report. As you may know, Nvidia is a bellwether semiconductor stock, and their talk about having their earnings be so strong due to AI-related chip demand has reverberated into other areas. So here we are with technology, certainly in an overbought position up here. Nice rally, very good volume characteristics on the rally. You want to see that. Ideally, that will give you an idea that this stocks in this area are under accumulation, and in essence, you could see a nice continuation rally. Taking a look at high volume days here in mid-March, also in January, if you recall the beginning of that healthy rally. So let's get back to those sectors. Take a look at some of these other areas up at the forefront. No surprise, communication services. This is going to be all about Meta. That is a major holding. And then Google, a little bit more flat, but it did outperform the S&P 500. And there are other vibrant areas in this communication services area that I will share with you. But again, for the most part, these two areas, AI related, and then strong earnings underlying some of the strength as well. Consumer discretionary, XLY, it did have a nice rally today. I would attribute a lot of that to Tesla's 6% gain today on news of Ford now taking Tesla up on their offer to use their EV charging stations. We did see, I'll just sidebar here for a minute, we did see a nice 6% rally in Ford, but it is not reversing its downtrend. That is one reason. Amazon, also a big winner today. Both of those stocks did help propel the consumer discretionary higher. But as we move forward, I'm going to share with you another development that's taking place beneath the surface relative to the consumer and their buying activity in the face of high inflation. So as we move on, let's take a look, because we have this S&P here. Areas beneath this, as I may have mentioned, is a 2-month daily price chart view of the sectors. I have it sorted by that RSI, that relative strength indicator. And you will want to be aware of other areas, because by and large, only 3 sectors were positive this past week, with the remaining 8 in negative territory. Let's go drill down into some of these weaker areas. And you may be surprised if you don't watch this show each week, or if you don't subscribe to my MEM Edge report. You may find this surprising that healthcare, staples, and utilities are down in this lower quartile. And this is something that I have been talking about, that relative underperformance. With my work, we have been taking names off. I did not, so from here, let's take a look at the weakness that is taking shape here. This is the healthcare sector, XLV. I will tell you that biotech stocks were down over 2.5%. That's one area, but also these big pharmas are getting hit as well. Moving along, consumer staples. Now, this has really been surprising to me. In fact, I wrote an article on Tuesday at StockCharts.com. You can go to this articles tab, and it was all about this deterioration in consumer staples, a break below this 50-day simple moving average. And again, it's all about a shift in consumers' spending habits. And while we're here, I will segue just a minute and share with you what is shaping up beneath the surface here. Some of the better performers that are really falling apart. This is Pepsi, naming one. We can also take a look at Kimberly-Clark as another example. And then Hershey. These are names that really had been taking the market by storm, but more recently are under selling pressure. The primary reason there is because consumers are being much more selective in their buying strategies. They are not, these names, Pepsi, among them also Kimberly-Clark and other Hershey's, had been experiencing strong sales despite raising their prices. And it was all about consumer loyalty. They were willing to pay up. There has been a shift. Several big box stores have alluded to it. One that CEO and CFO came out and talked about it, and that is BJ Wholesale Club. You can see this big drop here in earnings. And of course, among other products, they do sell a lot of those consumer staples products, and they cite it repeatedly that consumers are being highly selective. So in turn, we are seeing a deterioration in certainly some of those staples names. Let's go ahead from here and take a look at some of the underlying sub-industry groupings that take us beyond these sectors. And that's going to be, from my work, I use highly relevant ETFs, also a 2-month daily price chart view. I'm going to go ahead and update this. And I want to share with you a couple of items that took place last week. First up here is a tremendous move into semiconductors. I'll go ahead and pull up that weekly to give you that relevance. We were up over 10.5%. Again, Nvidia, a big driver of that move, and then also add-on plays. And I also wrote an article about that on Thursday that you can access here about those add-on plays within the semiconductor space relative to Nvidia that are also anticipated to trade quite a bit higher. Again, keying in on this high volume, strong accumulation, and then also going back to other periods when we began to get that high volume. But this clearly is in a league of its own, certainly relative to recent activity, and a shift most undoubtedly into semiconductor and other areas that I will share with you as we move on. Another area in technology that also outperformed this is IGV, the ETF for software stocks. And this is something that I did point out here upon the base breakout mid-month to about a week and a half ago. And then from there, a nice continuation rally. Take a look at that MACD black line up through the red, indicating that this period of consolidation is now in an uptrend. Relatively high volume again on these rally days. Nice price action there. We'll get into some of those names. And if you're not, I would advise taking a peek at my MEM Edge report. We've been capitalizing on these moves here that are really seemingly in the beginning stages of higher moves. Moving along, I did want to share with you that Treasury yields have increased. They did tick up a bit last week. This is the yield on that 10-year Treasury, 3.8%. Not alarmingly high, but it is in a general uptrend. And this is something that really gave housing stocks a bit of a hiccup here this past week. Mortgage rates up above 7%. So we did see a little bit of a pullback in housing, but not every name experienced that. And then also we did see positive news earlier this week, and on Monday into Tuesday, this is KRE, the regional banking ETF, experienced a nice pop. However, we did see a pullback, and this is something I've talked about repeatedly, the sense that you will need to see the KRE regional banking ETF assume or actually have a life above this 50-day simple moving average for more than just part of one day. It will need to be a multi-day experience so that in turn we can pull up that 50 days so that it can then act as support. Your momentum with these banks, RSI just waffling here at 50, not a pronounced move into positive territory. And your MACD has not made it into positive territory quite yet. When you see this type of deterioration from this February near-term peak all the way down to these mid-May lows, it's going to take time to really reverse this damage. So keeping an eye on that. However, I do get questions quite frequently, is it time to buy banks? And not quite yet. Other areas that we can take a quick look at here as we move forward. I talked about consumer and that change and shift that's taking shape. Here is XRT, and this is the retail ETF. And we can see it did peak in price here in February after that January into February rally, and has not been able to regain its footing in any way in shape to be able to then reverse and enter into an uptrend. A lot of these companies are coming out with earnings, and the news is not so good relative to not only their current quarter, but their recorded Q1 earnings as well. Another area I did talk about were biotechs, and they did sell off. This is very much a risk on area because most of the companies in this group do not yet have earnings. So when we see a deterioration there, it is really providing clues to a risk off underlying mentality among investors. So mixed signals at the end of the day. We can take a quick look here at the SPX because I did want to also share with you the equal weighted S&P 500, where you don't have those mega cap names really skewing the performance. So an equal weighted S&P view, and you can see that by and large, we are still in a downtrend with negative momentum. So this for me is a guide. I am participating in those tech names. However, I do still have a nice chunk of change in cash. So let's go ahead from here. I did want to go back, make sure I'm not missing anything else as it relates to these sub-industry groupings. We are seeing the US dollar continue to tick higher. In turn, we did see gold stocks pull back about 1.5% this week, and basic materials, I did not show that, but we can certainly very quickly take a peek. XLB declining. A lot of these commodities are going to be highly related to that rise in the US dollar. So from here, we can go ahead and take a look. I mentioned to you that I would share with you some of the add-on plays relative to the AI, the move into artificial intelligence. And certainly one thing of note is the fact that artificial intelligence has been being developed for several years now. It's only with Nvidia's announcement that there's a huge demand for chips to promote the AI move that these stocks are beginning to come to life. And it is not just about ChatGPT. Let's take a look at other areas that are really being impacted here by the renewed interest in AI. First up here is a stock Jabil, JBL. And I will tell you, I'm going to mark this up very quickly. What I wanted to share with you, this is a stock that I highlighted probably 2.5 years ago because of their advance, very, very innovative in that AI, but also robotics and elsewhere. Their real focus is that their products, AI driven, do improve industrial efficiency. And that is that sidebar move that you may not first make the leap toward, but we can see the company and the stock having this nice base breakout, nice volume, MACD up in positive territory. We are a little bit overbought. The stock can remain overbought, but more than anything, this is to highlight the fact that there are definitely subsidiary or auxiliary plays with this really keen interest in AI and an adoption. Now, next up here is HUBB. I'm going to pull up a full quote here, which it will then in turn share with you, because JBL is in the same group, and it is the electrical components sub-industry grouping. And we can see that HUBB had a nice flat base breakout last week. This is also AI related, and we can see on Thursday, following Nvidia's Wednesday late earnings, it did have a pop. This company has a pretty powerful no-code platform for AI. No need for engineers. They are citing or targeting students and others that want to take advantage of the move into AI. From here, another stock in that same grouping is Flex, FLEX. This company also, can pull that stock up. This company also really focuses on manufacturing, AI, and robotics. So here we are with a pronounced move, a downtrend reversal that took place mid-May following earnings, and then a nice continuation rally that's continuing to shape up with this stock. So from here, I will go ahead and pivot, and because eventually these stocks and these innovative companies that are using AI to help the industrial community become more efficient and hence higher profit margins, you will want to keep an eye out on the industrial companies that will benefit. Not overly vibrant, but this is Parker-Hannifin, a well-known industrial company. Had a little bit of a rally Thursday into Friday, but also from here, we can take a look at IR, Ingersoll Rand, another large, well-known stock. Again, keeping these on your radar because they will be at some point down the line positively impacted by the developments in AI, robotics, and other innovative ways to improve productivity. Eaton is an industrial company. They are power related, and we can see this nice uptrend that took place last week. The stock had a breakout on Friday today out of a multi-month period. Super high volume, RSI in positive territory, and then also that MACD. From here, we can take a look at stocks elsewhere that are beginning to show signs of life. And not all of them are going to be related to AI, but certainly a number of them might. Let's take a look at YEXT. And this particular stock, you can see what I'm sharing with you are a couple of names that are exhibiting downtrend reversal characteristics. And by that, I mean, for this particular name, the stock has moved above that 50-day. I will need to see more by way of further days above that 50-day. But the RSI now in positive territory, MACD just touching on that positive area. They are due to report their earnings in 2 weeks. And I did want to highlight here is their last release of earnings. And you can see that nice upward move that took place subsequent to that super high volume. Also, we can take a look at other names that could be potentially reversing their downtrend, and they already have reported earnings. This week, we did see Deckers come out with their earnings report. This particular stock had been a big winner for my MEM Edge subscribers. I did remove the stock as it began to break down with momentum below that net 50. But let's take a look at today's price action with this particular bar. This is called an outside reversal bar. And I believe I'm getting that right, but let me share with you the characteristics. When you see a particular daily price bar, the price does undercut the prior day's low, but it closes above the prior day's high. Outside reversal day, and oftentimes that will signal a potential downtrend reversal, and we can see, or actually bullish one-day candle, we can see the RSI very close to getting up there into positive territory, that MACD. So we're not quite ready for prime time yet. but definitely worth noting. And then we can take a look at stocks that have also sold off but already reported earnings. This is Cisco, and here we are with that same outside reversal bar after the release of earnings. Now, from there, it was not straight upward, but we didn't see a market that went straight up either. But by and by, we did see a nice uptrend following that. Another stock potentially reversing its recent downtrend is ANSS, a software stock. Again, a lot of these are going to be somehow AI related, but we can see the nice rally today push the stock up above that 50-day simple moving average, nice high volume RSI up above 50. And then that MACD had a crossover poised to enter into positive territory. And I believe I do have one more other possible downtrend reversal, and that is NetEase, NTES. And we can see it is internet related. The stock is poised for a nice 6-week base breakout here. If we can get up above that 95 level, not overly dynamic on the momentum just yet, but certainly very interesting. Also wanted to take a look at, I mentioned to you what is shaping up in that retail space relative to consumers. And I was going to share with you 2 companies that are in the same industry group, and they both reported their earnings this week. As we move through, this will make sense to you as far as what I am highlighting. And that is the fact that really consumers, again, are being very discretionary. So, or discreet, or really watching with where they put their money. So first up, we're going to take a look at a cosmetics firm that is, for the most part, I would say, based for consumers. It's not as pricey as other areas. Trying to think the best way to say that, but the product certainly is very highly regarded. It is just in the lower echelon relative to pricing. So here we are with ELF. They did come out with numbers, and take a look, gap up into a base breakout, very good looking chart. And we can see historically that the stock has that historical precedence. So from here, super high volume, you can see your momentum shift into a nice uptrend shaping up. And also we can take a look at another company that's in the same group relative to providing consumers with beauty or personal products, and that is Ulta, ULTA. And this particular company had a huge run here. They were doing a lot right by way of loyalty programs and so on. However, they are higher priced. So we can see this move lower going into the release of earnings. They did come out with numbers, gap down 13% due to weaker single-digit earnings and super high volume. Look for further downside. And then as a comparison, I didn't mention this, but ELF had 223% year-over-year earnings growth, above estimates by 115%. Ulta, same space, and they had earnings that were 7% year-over-year, below estimates. Now, I will tell you, for those of you that want to look behind the scenes, ULTA is a brick and mortar store that sells a number of these specialty consumer beauty products, while ELF is more a producer of these products. However, I would say that they are in the same space, and again, kind of highlighting that move away from the luxury areas into more certainly affordable. So also, I did want to take a look with you at a company that is due to report earnings. We are at the super tail end of earnings right now, but this is HPQ. Many of you may be very familiar with the stock, and interesting rally into earnings. I am going to be on the lookout for this company because it offers that nice 3.3% yield. So it will be interesting to see how they in fact come out with their earnings and what kind of response that we may see. Also taking a look at stocks that have pulled back that could be looking interesting. These are names that have already reported earnings. This is Shopify, SH OP. Here we are with that gap up on earnings, super big volume, and then a very orderly pullback to the 21-day simple moving average. Of note is the fact that during this pullback, the RSI remained in positive territory. So I would call this a reset as the stock pulls back. If we can get back above that 10-day moving average and get the momentum on this MACD shifting upward, that could be quite interesting. Another area that we can take a look at, a stock that had a surprising move last week, I would say, because it was viewed for a lengthy period as kind of being out of the picture, but last week's AI move did awaken this particular stock, and it is Intel. It did have a nice 5.8% rally, but I did want to highlight the fact that it is not ready or ripe, and here are some of the reasons why. First up, we did make it up above this 200-day simple moving average. Good news there, but take a look at the traffic by way of upside resistance that the stock is now encountering, and that is this 10, 21, and 50-day simple moving average. You want to see that momentum shift with that RSI, get that up above 50, and then also that MACD up above net neutral, so not quite ready for prime time yet. One other area that I might be surprising relative to a potential downtrend reversal is Goldman Sachs, GS. Now, again, we did see it move above these shorter term moving averages, but we do still have this 200-day moving average as possible upside resistance. You may want to keep that on your radar. Another name that we can take a quick look at here, not quite ready there. Honeywell, not so much. I also did want to share with you among semiconductors, because you will want to have a way to stay on top of these names, and several of them are really being clear-cut outperformers while others are lagging. There is a name that came on today, and it is not directly AI related. Rather, it is a semiconductor company that focuses on automobiles. And the reason I'm highlighting that, and in particular electric vehicles, I talked to you about Tesla's move. We can take a quick look at that here. Tesla had a nice rally this week. The stock was up 8% for the week, and talked today as far as Ford taking advantage of the ability to use Tesla's EV charging stations. At the end of the day, it's all about growth in the EV space. and Semiconductor provides products that are really geared and focused on that EV marketplace. It's, again, not an AI play, but we are on the verge of a nice base breakout, super high volume here with upside momentum shifts. And that's it for this week, everyone. I hope you have a fantastic weekend. If you haven't already, use that link below. You can take a look at my MEM Edge report for a 4-week period for a very nominal fee. I'll keep you in front of those moves, those stocks that are on the move, as well as alert you to any shifts in the broader markets. Take care. I'll see you next Friday.